Hi everybody, welcome back to the channel, and today I wanted to discuss how you can make $1,000 per month and how much you'd actually have to invest into an ETF such as DIVO, D-I-V-O. Now, for those of you guys who are new to the stock, that is the Amplify, or the ETF, Amplify CWP Enhanced Dividend Income ETF, trading at $40 a share. Now, the first thing you'll notice is it's up 6.85% in the last year. So not as much as the S&P 500, not as much as the NASDAQ, right? But over the last 5 years, we are up 55%. This ETF has been around since 2017. We're going to go back and look at the dividend history and everything else. In fact, if you look at the max history, you can see this came out in actually 2016. I stand corrected. December 2016 is when this ETF came out. And as you can see, it came out at about $25 a share, survived COVID, went down to 22, and ever since then has been climbing out of that. So that's the first thing to notice about this ETF, is that you're getting share price appreciation. And because of that, is that a good thing? I would say yes. Over the long term, that's called dividend growth on top of, if you're growing your dividends. So the next thing, right? Now here's the chart going back to, May of 2024. You can go all the way back and see all those monthly dividends that have been paid out every single month, even going back to 2023. There's just so many. Basically, you can just go over the chart and look at it. But the point is, if you look at the dividend, 4.77% according to finviz.com. Now, according to NASDAQ.com, in fact, let's go over here. We're going to look at how much you'd have to basically invest, exactly how much to make $1,000 per month based upon the dividend yield. And then we'll also run some other calculations, like if you invest this much, how much could you get, and stuff like that. Now, keep in mind, even if you're not starting off at $1,000, even if you're only starting off at $100 per month with the amount that you're investing, that's perfectly fine. Like, you want to grow into $1,000 a month in the long term, but that takes a lot of time, right? So we want to make sure that we're investing for dividend growth in an ETF like this. And as you can see, since 2017, these dividends were paid out quarterly initially, and then they started paying monthly. So August, September, October, November, December, all the way through 2019, 2020, even through COVID. Now, during COVID, right, we were trying to trading like 10, 11 cents, 12 cents, 14 cents. My cat's running around. We got a new male cat. He is just something else. But 15 cents. We're starting to creep up a little bit in terms of the dividends that we're getting paid every single month, right? So if we go into 2023, we're starting to get paid 15 to 16 cents. We're starting to notice a step up, and you can kind of put a chart on the dividends and look at how much in dividends you're getting paid. And I think my cat might ruin my video here, but so the dividends you're getting paid is that, you're going to see 14, let's say, to 15 cents, 16 cents per share every single month. Okay, so that's basically what you're looking at. Now, if you take that and you want to find out how much you could make, if you want to make $1,000 per month, how much would you have to invest? Now, if we're looking at $246,000, take $12,000, that's, $1,000 per month. There's 12 months in a year, divided by 0.0487. That's the dividend yield I'm getting from NASDAQ. So I want to go with this one, 4.87%. I think FinViz said 4.77, so a slight difference. 4.87%, 246,000 is what you'd have to invest. Now, that's a big amount of money, right? So just take it divided by 10. If you are only going to get $100 per month, that's fine. 24,000 is what you have to invest. Now, that's doable. People can make this happen with 24, 25,000 if you want to get $100 to $200 a month, depending on the yield you're getting. If you have an ETF that's yielding 8%, 10%, now we're talking, if you can get 25,000 invested, now we're talking maybe $150, $200 a month, if not more, right? Depending on the yield you're getting. But that's going to be your covered call ETFs. And if you look at this one in particular, you don't even really have to look into it. You can just look at the track record, because you can look at if you go to the website, why invest in DIVO? We can go over the details of this one and how this works. But there's some covered call ETFs that will pay 10 to 12%, 15%. Now, this one has income potential, so it invests in high-quality dividend-oriented stocks along with covered calls. So it does do the covered call strategy on individual stocks. Active management allows the portfolio manager to identify opportunities and risk and act on those decisions in real time. Seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. So we want to see enhanced dividend income portfolio, or EDIP. The strategy is managed by DIVO's sub-advisor Capital Wealth Planning. So what they're doing is investing in large cap, high quality companies with a history of dividend growth and a tactical covered call strategy on individual stocks. DIVO is strategically designed to offer high levels of total return on a risk-adjusted basis. There's that distribution of about 4.7, 4.8%, etc. So it goes over basically the net asset value, as we already went over, and basically just talking about this. Now, what I like here is the consistency. We're seeing 15 to 16 cents per share. Now, if we take even just like $50,000 and we put it into something like this, if we put it in there at the price of, let's just say $41 a share. If it's at 41, 1,200 shares. We'll just call it even at 1,200 shares. How much can you actually get with, let's say, 1,200 shares of an ETF like this based upon the last dividend, 0.167? How much would you have gotten? You'd have gotten $200 just from doing that. So even if you're not going to get to $1,000 right away, as we've seen, these dividends have been going up. If you look back at the history of this, since inception, we've seen some growth in these dividends. But the point is, overall, the average is going up. That's what we want to see. So you're getting dividend growth. You're getting a yield of about 4.87%. And with that being said, guys, hope you enjoyed this late night video of the cash flow investor. We talk about all kinds of opportunities in the market. We talk about ETFs like this. We talk about how to make $1,000 per month or even $200 per month, as we just went over. If you wanted to make, you get 600 shares of this ETF, for example. You take 25,000 divided by $41 a share, and you can get 600 shares of this ETF times a 16-cent dividend, even on a bad month, or a 15-cent dividend. That's $90 in a month. That pays your phone bill, right? Unless you have a really expensive phone bill. I don't know how much your phone bill is, but the point is, guys, you can do this. There's different opportunities in the market, and we have to look at it from the perspective of long-term. Do we want to be able to pay our bills with something like this, and do we want to be able to generate cash flows, which can be very beneficial for ourselves and our family? And anybody can do this. Anybody can do this. You can do this and receive $100 a month, $200 a month. It all depends on how much you're investing, what you're putting it into, because if you're able to really start to build a portfolio that has some good dividends in it, then that's going to be very beneficial long term. And so you just have to look at it from the perspective of what's best for your risk tolerance. DIVO is definitely an option in this case. And, if you're investing, for $1,000 per month, maybe you do want to invest a little bit more. Maybe you do want to put in, if we take a $250,000 at the same price of 41, if we're just rounding up to assume we're going to, buy a crazy amount of this, right? So let's just say 6,000 shares. We'll even round down in that case. 6,000 shares times, 0.167, the most recent dividend. How much would we have received just from that dividend? We would have received $1,002. But you have to invest $250,000. That's the thing. So who wants to do that, right? Who wants to actually go out and put that much in there when you could just invest $25,000 to get $100 and then diversify into other ETFs and get, different income streams set up to where you're well diversified, right? So that's kind of the idea here. But if, you enjoy a video like this, let me know what you think in the comments down below. Thank you so much for tuning in, guys, and we will see you in the next one. Take care.